Welcome back. You're with us on Closing Bell. Let's get the conversation to our next guest now. Tushar Pradhan, director at HXGON Partners, is with us. Tushar, thank you so much for joining in. Great to have you with us on the show this afternoon. So, I just want to take forward the point that we've been discussing, how this market is positioned right now at all-time highs after a stupendous rally. What have you made of the earnings season so far? I mean, do corporate earnings offer enough juice to keep fueling the rally further? I think you're on mute, Tushar.
No, I was just mentioning that it's a very interesting question because if you look at earnings growth per se, that is very much in line. And I think it's something that we should be very proud of to generate this kind of earnings growth. The issue is not that the earnings growth doesn't have juice. The issue is that how much is it already priced into the market, and especially some of the prices. So no matter how good your earnings are going to be, I think the market is always going to be a little disappointed if it is not anything much more than it is expected. So you can imagine, it's a reverse psychology at work here. While there is nothing wrong with the earnings, it is the expectations which is driving the volatility in the market for at least some of the more bigger companies at this time. That is my opinion.
Tushar, talking about expectations and what actually comes out, what if, the elections is the next big trigger, right? And when this election process started off, people were talking about 350 odd. Do you think a simple majority is good enough, or will the street read further into the numbers and say, no, we expected 320? Or do you think a majority 280 to 300, that's good enough, and then we won't see any kind of selling? Because the market has been quite hot, expecting a positive outcome.
Yeah, I think here also the debate is in terms of what is the expectation. If the expectation is 350 plus or 400 or whatever, and that is what I think most of the expectations in the market are, then anything lesser than that is going to be a disappointment. Not because of the outcome, because we all know that it is not going to change the overall picture too much. But it is something to lead to saying that, which means that there will be lesser, I would say, parliamentary push to kind of get the reforms through in a manner which is much easier if you had more seats, etc., etc. So I think the debate will then start in terms of, what is the reform agenda? How quickly can, some of the things which are already, slated for the next 100 days after the election can be affected, and how much of that impact does, it cause to India Inc. per se. So I think it's not a simple judgment of whether it is below 350 or plus. It is more to do with the market's expectation, and if there is any disappointment to saying that, okay, if that number is not coming, that would mean that it may be a lot more difficult to pass through reform the way it was expected before, and I think that there will be some ramification of that. But having said that, I will also mention the fact that these are really very, very tactical moves. I mean, we are talking about the next 10 years being a pretty significant period of growth for India as a nation in its history. So when you juxtapose that with, a weak electoral result, or even just any flash in the pan that may happen for whatever low probability it may be, I think we should really look past that to say that, look, even if it happens, it's not going to change the fundamental picture too much.
But just in the near term, if there is a disappointment on the electoral front, what kind of weakness are we perhaps going to stare at? Is it going to be a minor 2-5% kind of a decline, or can it shake the market maybe for the next 6 months?
Again, I would say that the markets pretty much are manic in most cases. So to make a sane judgment about what they will fall to will be itself a very foolish venture. But as you know, that markets tend to be pretty much over the board in whichever direction. So for example, if you have a compounding of impacts, say for example, beyond the near-term impact of the election, there may be another, say, a global geopolitical situation which may completely, be unexpected at that time, compounded with some other economic debacle, or, some sort of things which, compound for that matter. Then you can see a significant drawdown, and that is obviously because of the forces of these factors coming together at one time. But I think if it is just the election that we are talking about, there will be a mild correction in the sense that people will say, look, not as much as expected, maybe things will get a little longer to get affected, but it's not really changing the whole picture at all, and then the market will move on. And many times, at least in my short career, I have said and thought of that even more dramatic election surprises, I think the market has been able to shrug off within a week's time, if not even a few days. So again, I would not, really place too much, importance to the longer term nature of how our markets and our economy is. And yes, in the short term, it can be pretty volatile.
Okay. Fair enough. It is short-term volatility. So, Tushar, if you are, still constructive on the medium to long term, despite these elevated expectations and the run-up in prices, then how are you going about the portfolio construct? What do you like the most? What would you keep as a key overweight?
No, I think it's a very interesting question because many times people tend to follow what is popular. And what is popular may not necessarily be cheap. And what is popular may also not necessarily be what I would call a significantly long-term, idea. So I think one needs to be pretty diversified about one's portfolio construction activity at this time. I think I would have a very large share of significantly large, secure companies which have compounding earnings beyond the 5-year term. So we are talking about, generally the larger financial companies as such. I think I'll have a fair bit of chunk of that. I will also now focus a lot more on manufacturing. And I think this is where the idea becomes a little cloudy because some of these manufacturing companies are trading at unheard of valuations even as we speak. So while there is compounding where there is very secular growth quarter over quarter, one can imagine in the next 2, 3, 4, 5 years, yet, you might have to wait for a year or two before it starts to really generate real returns for you. Less of all the froth there is in the market. And I would then look at across the entire spectrum of consumption, of all of these newer technology companies which are coming to the market, which are not really big. So I would construct a really, really flexible portfolio with a large chunk at this time made up of, large to mid caps, and then some really very select ideas down the cap curve, down to the small caps, and becoming really specific about what you would like to choose. So I would bet on India. I would bet on manufacturing. I would bet on financials because that is really the fuel for the economy to go forward. And I think anywhere in any way that you look at it, I don't think interest rates are either going to crash or going to go up sharply from here. So you're looking at a very stable interest rate scenario. You're looking at stable currency. And all of that actually means pretty much a positive attitude that one should keep towards financials over time.
Okay, all right, Tushar. I wanted to ask you particularly about Kotak Mahindra Bank. That used to be the poster boy, right, in terms of banking names that made big wealth. If you talk to anyone between 2010 to 2020, they would say that's the bank that makes you big money, HDFC Bank, Kotak Mahindra Bank. Now, both of them have run into rough weather. For HDFC Bank, because of that merger, suddenly the street came to terms with the high cost, borrowings that they'll have to pay. And it's a toss-up between loan growth as well as margins and return ratios. So, how would you view this one? And Kotak Mahindra Bank, because of the recent regulatory action as well as the exit at the top. What's your view on both these two? Quality run names, near-term headwinds. Do you think it's near-term? Would you look to buy into either of them?
Yeah, again, a fairly nuanced question, I must say. It's not a simple way that I look at this. You have to understand that Indian banking, especially private banks, have had a very, very good run because they came off of pretty, I would say, virgin markets where most of these services were not available to, I would call, the larger unbanked or underbanked Indian population. They made banking extremely useful, scientific, and really in the face of most of our customers, which has increased the reach of people who typically bank through and the services which are offered. So that was the golden period. Now, one of the things you have to understand is that over time, companies as well as banks especially, they become fairly large. And the growth beyond that has to be much measured. So, for example, if you are look at the smaller banks. I think those are an example that I can give you what maybe a Kotak was or some of these smaller private bank were maybe 20 years ago. And the kind of growth that you will see in the smaller banks, the small banks as we call them, if they do their job right, is something spectacular, is the rate at which you will continue to see them grow. Now, once they grow to a size, and we are talking about now sizes of HDFC Bank, Kotak Bank, etc., the growth from here on is always going to be a much bigger challenge at the rate at which they are planning to grow. And typically, market will reward rates of growth rather than size per se. And the size gives it stability, but it will not give you the same kind of returns. Now, the two companies that we talk about, they are more of a near-term nature that I look at. If you look at HDFC Bank, and I've looked at this bank for a long, long time, every merger has brought some sort of, I won't say challenge, but it's something which takes time for the bank to actually digest it. And it's so many mergers that we've seen HDFC Bank do in the past. And it's always come out trumps after being able to absorb it. Now, the size of the merger will depend on, how long it takes for the bank to turn around. But I think given the size, its dominance in the market, and especially where it is positioned, it is probably a near-term headwind. If you look at Kotak also on the same, I think, changes at the top, people who manage, etc., that is naturally a transition that every bank will have to go through. Does that mean that the entire franchise is at risk? Does that mean that the whole strategic element of what Kotak brings to the market is at risk? I don't think so. But I think overall, what needs to be something that every bank, whether it is Kotak, HDFC, whoever, needs to heed is the ability to deliver in front of the regulator a franchise which is above board, something which they have to invest in and they have to be very serious about, and ensure data privacy and ensure that the delivery of services is above board. I think if that is a focus for all of the banking industry as such, I think we're in a safe place. And these are good warning signs for ensuring that the banking industry remains pretty much intact over the period of time that we're expecting explosive growth in the economy. So I think maybe red flags at the right time, and the term being what I really focus on between 5 to 10 years from now. I mean, what's a blip like this to look like?
Sure enough. Just need to have that long-term vision. Tushar, good speaking with you today. Thank you very much for joining in. Really appreciate your views. You have a good weekend, and we'll look forward to the next conversation. Well, the market is trying to ensure that this fall doesn't get any deeper. For what it's worth, I mean, there's a fight around 22,400, and that level's holding. A little bit of a recovery from the lowest point. If I talk about some of the stocks that are trying to bounce off, TCS would be one of them, still down, but again, trying to move off the lows. NTPC also trying to do the same thing. State Bank of India at the flat line right now. So this is where the push and pull is really playing out. Well, that's the market for the time being. Let's take a break on that note. Come back on the other side. We'll get you all the buzz from dealing rooms. Let's see what Nimesh has picked up on today's fall. And then, of course, we get you some final trades with Mitesh as well.